Welcome back to another episode of Money with Ben, where you can learn how to manage your money with confidence. My name's Ben, and today we're going to be talking about efficiency, and we're going to be using the company Apple, the creator of the iPhone, such as the one that I'm using to record this video right now. And I have their financial statements printed out over here, so if you see me looking down, that's the reason why. So what is efficiency? Before we get into that, I want to be sure to give you a recap of what we talked about in the previous episodes of Money with Ben. And that was in regards to effectiveness, because effectiveness was basically saying how effective are your assets in generating sales. And the best way that you think about it is, are your assets giving you the biggest bang for your buck? The thing about assets generating revenue is that revenue is not the money that we get to keep. It's the money that the customer paid for our products and services. And one of the fundamental principles of business is that if you want to make money, you have to spend money. And whenever you see revenue, you can be sure that you're also going to see expenses. So efficiency is basically trying to figure out, are you managing your expenses well so that at the very bottom line, which is your net income, that number of your net income is as big as it can be. Basically, it's asking how efficient is your business? How efficiently are you running your expenses so that way you can make sure that you are getting as much net income as possible? And there's a very simple formula to help determine whether you are doing that or not. And that is called the return on sales. This formula is pretty simple. It's basically net income divided by sales. And this is all for the same period. So I know in the effectiveness ratio, we talked about like the average total assets and stuff like that. But since this is two income statement numbers, we can just use the same number from each period. So we can use the net income number and the gross revenue number from any particular year. And once again, I'm going to be using Apple in order to describe this. I have it printed out here. It's going to be showing up on the screen as well. Let's take a look at the income statement, or what they call the consolidated statement of operations. It's just a fancy word of saying income statement or the profit and loss. They kind of have to say it that way because they're a company that's filing under the SEC. So it's all right. Just know it's the same thing. Let's look at September 30th, 2023. Now you might be thinking, oh, wait, did Apple only make $96,000 in net income? No, remember. As you can see up here in the corner, it says in millions. So you just take that number, multiply it by million. So they really made almost $97 billion. It's Apple. So let's take a look at this income statement. They have a net income of $96,995, and they have total net sales of $383,285. So if you want to figure out how efficient they are running their company, you just divide the net income divided by the sales. So if we look at that, the net income divided by sales is $96,995 divided by $383,285, and you get roughly 25% if you round it to the nearest percentage. So that basically means that for every dollar that they make in revenue, at the end of everything, they get to take home 25 cents in net income. Now the question is that a good thing or is that a bad thing? Here's the thing, let's take a look at this. If we're running a business, we want to make sure that we get as much money back as possible, and we want to make sure that we have the least amount of expenses possible. So if we want to have greater efficiency, this number needs to go up. So if we take a look at the previous years, so September 2021, September of 2022, you'll notice that their net income over sales, so their return on sales, roughly stays between 26 and 25%. That is a sign that Apple does a pretty good job making sure that its numbers stay relatively stable. Now it went down just 1 percentage point if you're rounding. So it's able to do a really good job in making sure that you can basically predict that this company is going to be getting a quarter for every dollar it receives in revenue. It's a pretty stable company in that sense if we're just looking at these 3 years. So going back to the question, is this a efficient company? Well, the answer for most things is it depends. We can use the efficiency ratio, the return on sales, and we can compare it to another company like Samsung or another industry or another company that also is in the business of making products, smartphones, software, things like that. And then we can compare this return on sales ratio to the other companies to see how efficient is Apple in running their business. But overall, in this industry, 25 is what you can expect, especially since Apple is a relatively stable, has been here for a long time. Many people would consider it to be a blue chip company if you're talking about investment. But then you have another question. What if you want to make this number higher? Let's say that you are an owner of Apple. Let's say you're one of the managers at Apple and you had the chance of trying to get this number bigger, to try to make suggestions on how to make the company more efficient. You can use this overall number as a starting point, but eventually you're going to have to look a little bit deeper into the income statement in order to figure out what is the company spending on? Where are their expenses coming from for the most part? A way to basically break down this efficiency ratio is by creating a statement that we call the common size statement or the common size income statement. Basically, the common size income statement is asking the question, how much of each line item is related to the total revenue? In other words, you can think of it of which expense is taking the most of our net revenue away from us. And we like to denominate this in the forms of percentage. What I also have here is the common size income statement for Apple. And basically the way that you do this, you could do this yourself. Unfortunately, Apple does not provide the common size if you try to look into their SEC, but figuring out the formula is really simple. All you have to do is take the number of any line item here and then divide it by that period's total revenue. So like, for example, let's take the one from the top. Products. By the way, this is all for 2021. Their products made up $297,392. Their total net sales is $365,817. So all you have to do, take the $297,000, divide it by the $365,000, and then you get 81%. And so basically you're trying to figure out what are the percentages for each of these line items. So if you take a look and you apply this formula, like for example, you look at cost of sales, you have a different numerator, which will be the 192,266, but the same denominator. The denominator for all these formulas would be the total net sales for this particular company. And for this one, we see that it's also going to be 365,817. And the cost of sales for the product side is 53%. So you just make this formula all the way down. So what we have here is the income statement for Apple. And all you can see here is what is the percentage of each line item in relation to the total net sales for that current period. And as you can see, the biggest expenses for Apple are their cost of sales for their products and the cost of sales for their services and their research and development. It can kind of fluctuate up and down. So if I was a manager at Apple, one of the first things I'm going to be looking at is, all right, how efficient are we in getting these products manufactured? If there's a way that we can get the exact same product, the exact same iPhone, but using a more efficient process, either we use a more affordable material, either we use a more affordable labor, or we find a brand new system that allows more iPhones or more devices to be created using less effort, I'm going to be looking primarily at that because that is the primary contributor to having less in net income. And as you can see, Apple has been doing that. If you look in 2021, before their product expenses, their cost of sales made up 53%. But then it dropped down to 51% and then to 49%. So as you can see, they are also taking a look at this. They're always asking themselves, all right, what can we do to make our company more efficient? And how can we make our company create the same product, generate the same revenue, but with less cost? And this is my recommendation to every other business. If we're going to take Apple's example, what you need to do whenever you're analyzing your business, you can use this ratio, the return on sales ratio, in order to figure out how efficient your company is. And this can depend on your industry, and that's fine. You can figure out initially what your efficiency is. But then I would suggest break it down to each of these expenses line items. So that way you can find out as a percentage which expense is costing you the most. And when you find those expenses, ask yourself, what can I do to lower the cost of these expenses? I'll tell you this, as a CPA who has worked with small businesses, one of the best things that you can do in order to get the same type of product or service to your customer, but with less expenses, is basically to stop buying junk you don't need. We have a tendency as business owners to forget that we are in the business of doing business. Like, for example, I, as a CPA, my business is to do business as an accountant, a bookkeeper, a tax preparer, a financial advisor. That is my goal. If I can provide that service to you guys, then I am doing my job well. But sometimes we as businesses tend to forget that, and we try to make ourselves think that we are in the business of looking good. And that leads to buying expenses, incurring expenses, buying assets, gathering a whole bunch of costs at a premium just because they look nice. Like, for example, if you're in a industry that requires a lot of equipment or vehicles, we don't like thinking about getting the cheap vehicle that looks kind of crummy and probably might have been used. No, we want the brand new shiny vehicle. We want to have not the crummy used furniture for our offices, but we want to have the nice shiny special wood and stone and glass and stuff like that. So that way we can look good. We can easily get into this idea of looking good. But remember, your business is not about looking good unless you're a supermodel or you're in the business of literally trying to look good. You don't have to purchase these products at a premium just because it's going to make you look better. In fact, there are many different companies. Walmart, that was one of the stories I've heard, that if you look at the amount of money that they spent in their office, if you go to the corporate office in Walmart, according to this story, you're not going to see fancy office chairs. You're just going to see regular either wood or some type of plastic folding chairs, probably the ones that they sell at Walmart. They realized that Walmart's in the industry of providing groceries and other products to their customers, and they don't need to spend extra on things that they really don't need. If you want to make your business more efficient, stop buying things that you don't need. Start buying things that you can afford, that you can handle, that is going to give you the same product, but for less cost. And you can use Apple as an example. You can see what their products that they're making sure every single year that they're trying to drive that cost down as much as possible. Are they successful every single time? No, not necessarily. There are so many things that can contribute to that. But that is what you want to be striving for in your business. So in the next video, we're going to be talking about how we can determine how risky our business performance is. And we're going to be using some special formula in order to determine the risk that you are incurring in your efficiency process. But until then, I hope you were able to take away something from Apple and from this video. This has been Money with Ben. My name is Ben, and I'll see you next time.